Entrepreneurs, real estate investors, what is the advantages as well as the disadvantages of an SBA loan? What are the pluses and minuses? So I was talking to a CPA and he was just adamant that he did not want to do a SBA loan. And so we were going back and forth, and I was just trying to figure out why he was so dead against an SBA loan, and I thought, well, shoot, let's look at the three advantages as well as the three disadvantages of an SBA loan, and then I'll cover at the end the reason why he just said he didn't want to get an SBA loan. All right, so number one advantage, right? Lower interest rates. Now, one of the benefits to financial institutions, banks, as well as non-bank lender, SBA lenders, is that the SBA would guarantee the loan. So, in essence, like if you as a, a borrower were to default on the loan, uh, they would they would almost like an insurance policy would cover the part of the losses of the loan, not the whole thing, but part of the losses of the loan. And so that encourages the bank as well as these this thing called debentures to sell these SBA loans on the secondary market. So if you had a guarantee and you were lending money, your interest rate might actually be lower. And typically, most SBA loans are tied to prime plus two and three quarters is typically, the lowest spread on the loan. Now, I wouldn't say this is always the case. I mean, this is the one that I wouldn't always agree because I have a line of credit that's lower than that prime plus two and three quarters, but I've also had it for a while too. But so that's number one. Number two, long repayment terms. Now, now typically one of the great things about this 7A working capital loan that we help underwrite is a 10-year term, prime plus two and three quarters, like I said. Is in essence is no collateral. It's unsecured because you file a UCC against the business, and you have to report the collateral that for that loan, in order for it to be collateralized. So being that it's a 10-year term and it's a working capital loan, that's a lot longer than traditional bank uh, lines of credit or lines of credit or term loans. Usually, most of those are 5, maybe 7 years, typically at the most. So that is definitely the case, and especially for like real estate loans. A lot of times the terms, like most a lot of times the bankers only want to do maybe 15-year terms, maybe 20-year terms, where a lot of times you can do like a 25-year term for SBA on SBA like 504 loans. And that gets into number three, low down payment requirements, especially for the 504 program, because you could buy a building or some equipment and only have to put down 10% under this program. And so, yeah, so there's 90% LTV, they'll fund that up to 90% of the loan amount. And so, that's strong. I mean, that's like a big, big thing. Um, so and for some 7A programs, you you can almost do 100%, especially like if it's a working capital and there's enough collateral and that kind of stuff. Like if you purchase a business or that kind of stuff, you have to put some down, but they'll allow for owner finance and that kind of stuff. Sometimes, depending on the lender, you know, I've seen some deals where the borrower only had to put 5% down, but typically it's at least 10%, even if the seller is carrying back some. But all right, so those are the three advantages. The three disadvantages is a lengthy application process. So that's number one. Uh, yes, definitely there's a lot more documentation for an SBA loan versus a regular loan. So yeah, so you got to buckle your seatbelt. However, us as well as a lot of other, packagers and so forth, will, make that process for you pretty easy. But, just going in on it, you are going to sign more paper or file more paperwork on a SBA loan. And then number two, stricter eligibility criteria. So not all businesses qualify for SBA loans. I'll say that. There's different requirements, time of just different requirements a lot of times for SBA loans. Like I'll give you one criteria, and maybe you can call this have to do with paperwork or whatever. But let's just say you get one of those 10-year term loan, working capital loans, and you rent, you rent your building or whatever, right? And the bank of the SBA lender has this requirement to make sure that if you have a 10-year term loan, you have the option to be able to stay in that property for 10 years as well. Not to say that you have to have a 10-year lease, but you have to at least have options to stay there. I mean, I remember I did this and it was really tricky because this catering company was operating out of one of those, we'll call it like test kitchens or whatever. And a lot of times that stuff is like month to month. And we had to work out a situation to put together a lease agreement together that kind of had an option to rent it out for 10 years. But that was just a pain in the butt. And then sometimes that same lender also has to sign a documentation that if the loan goes bad, that, you know, from the lessor that they can come in and get the stuff if their SBA is collateralizing that loan or the lender's collateralizing that loan. So that's number two. Number three, and this is the reason why that CPA just said that he didn't want to, uh, get an SBA loan, is that a personal guarantee, a requirement, and that's the requirement for all SBA loans. You have to have a personal guarantee. So if you don't want to have a personal guarantee, you're probably not going to want to do an SBA loan. And so we have a program. It's in the show notes down the bottom, that you go to keysforbusiness.com/masterclass, where we show business owners um, how to get access to capital without even taking out a loan, but personally without a personal guarantee, without even putting up your house or other properties. Because, I forgot to say that one of the criteria for a lot of SBA loans, especially if there's not enough collateral, is they'll put a second on your house because you have to provide a personal guarantee. I mean, a personal financial statement, so they know what personal assets that you have. So that's one of the reasons why. There you go. That's one of the reasons why he did not want to do that. But yeah, just check us out, the master class, if you're interested in looking at getting financing without a personal guarantee. keysforbusiness.com/masterclass. All right. Follow for more cool information, and I will see you soon. Thanks for watching.